our Market Monitor guest tonight, is still upbeat on stocks, and that despite all of the hand-wringing about Syria, jobs, and the Fed. He's Chuck Carlson, CEO at Horizon Investment Services. Hi, Chuck.
Hi, Susie.
Well, nice to know that somebody is really bullish and upbeat. Tell us why.
Well, one of the tools that we use to discern the market's primary trend, and that's a trend that typically lasts 6 months or longer, is the Dow theory. And the Dow theory's last major signal was a bull market signal when you had both the industrials and transports move to all-time highs in very early August. We regard the pullback that we've seen in August and into early September as merely a correction within a bull market. We think that at some point here it will run its course, and it may be pretty close actually to running its course. And we would expect stocks and the major averages to start to trend higher through the remainder of the year.
All right, let's run through some of your picks. And once again, you're expecting some pretty significant percentage gains out of these stocks. First on the list is Cisco. Why?
Well, I know it's somewhat of a controversial stock based on their last quarterly earnings announcement, but the fact of the matter is, A, I think that drop in the price is giving investors an opportunity. B, I didn't think it was that bad of a quarter, and I think there were some reasons why the company's projections might have been a little dour, because I don't think they really wanted to be ebullient in the face of the fact they were laying off some workers in some areas that weren't generating much in profit. So I like the yield, almost 3%. I like the dividend growth. They raised their dividend more than 20% this year. All in all, I think it's a good value right now, and one that I think with the dividend yield and appreciation can be 15 to 20% gainer over the next 12 months.
The other stock that you told us could gain by 15 to 20% over the next year or so is Dover, ticker symbol DOV. Tell us the story there.
Sure. Dover is kind of a multi-industrial mini conglomerate. They have businesses across industrial, electronics, technology, et cetera. I normally don't like companies like that, but Dover does a very good job of managing those businesses. They prune when they have to prune. They buy when they're good acquisitions available. The company's earnings are going to grow at double-digit rates. They just increased their dividend 7%. It was the 58th consecutive year of dividend increases for the company, and you can still buy that growth at what we feel are reasonable prices.
Next on the list is Qualcomm, the chip maker. You also not only see a percentage gain in the stock price, but also the dividend.
Right. Qualcomm raised its dividend 40% earlier this year. The stock yield's 2.1%. You know, we like dividend growers right now. If you're going to play the dividend game, don't play yield as much as growth and try to get that 2% yield. Qualcomm fits that to a T. It's a company involved in the chip business. They have a nice annuity business because of the licensing of chip technology. The other thing I do like about Qualcomm, the stock's trading around $68, and it has barely buckled during the last 5 weeks during this rocky market period. So I really like that resiliency and think this stock could do quite well as the markets resume their upward march.
Chuck, we just have a few seconds left. Tell us about your next one, Express Scripts, which has no dividend, doesn't fit into the formula which you've been talking about. Why do you like this one? And its ticker is ESRX.
Right. Express Scripts is a pharmacy benefits manager, and it is kind of a different kind of play than the other three stocks, but I like it as a play on the Affordable Health Care Act. You're going to see more people coming into the system for prescription drugs. That, in turn, is going to drive demand for Express Scripts services. You can buy that stock at about 14 times next year's earnings, and they're going to grow at double-digit rates this year and next.
Okay.
So, again, it's that growth at a reasonable price story.
Any disclosures to make, Chuck?
Yes, our firm, as well as our clients, own all 4 of those stocks.
All right. Thank you so much. Chuck Carlson,
Thank you.
CEO at Horizon Investment Services.